Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, November 25th, 2025, and here is everything you need to know as the markets close for today. It was a third straight session of losses for the Indian equity markets as bears maintained their grip amid heightened volatility on the monthly futures and options expiry day. The Sensex shed 314 points to settle at 84,587, marking a decline of 0.37%. The Nifty 50 slipped 75 points or 0.29% to close at 25,885, failing to hold the crucial 26,000 mark, despite briefly touching an intraday high of 26,033 earlier in the session. Bank Nifty also ended in the red, down 15 points at 58,820, extending its slide from the record high of 59,440, touched just last week. The overall sentiment remained cautious as foreign institutional investors continued their selling spree, offloading shares worth over 4,170 crore rupees in the cash segment yesterday, while domestic institutional investors provided some cushion by buying shares worth around 4,500 crore. The rupee traded in a tight range against the US dollar, closing near 89.22, reflecting the persistent pressure from foreign outflows, though it held steady without hitting any new lows during the session. Moving to the day's star performers and laggards, Bharat Electronics emerged as the top gainer on the Nifty 50, jumping 1.58% to close at 410 rupees after the company signed a landmark joint venture agreement with France's Safran Electronics and Defense to manufacture hammer precision-guided air-to-ground weapons in India. This deal supports the Atmanirbhar Bharat initiative, and the stock responded positively to this strategic defense partnership. State Bank of India extended its winning streak, rising 1.5% to close near 988 rupees, hovering near its all-time high, as the banking giant continues to benefit from improving asset quality and strong credit growth. Hindalco also performed well, gaining 1.4% on the back of strength in metal prices. On the losing side, Adani Enterprises was the biggest drag on the index, tumbling nearly 3% to close at 2,329 rupees, as the company launched its massive 24,930 crore rupees rights issue at a 23% discount to the market price. Tata Motors passenger vehicles fell 1.6% after HSBC highlighted downside risks for Jaguar Land Rover, including US tariffs and aging portfolio concerns. Trent and Infosys also ended among the top losers, shedding around 1.5% and 1.15% respectively, as the IT sector faced selling pressure despite hopes of a US Federal Reserve rate cut in December. Looking at the technical picture, the Nifty 50 tested its immediate support near 25,850, which held during the session, preventing a deeper correction. On the upside, the index continues to face stiff resistance at the 26,000 level, with the broader resistance zone extending up to 26,150 to 26,200. For Bank Nifty, support is placed at 58,300 to 58,500, while resistance remains firm at 59,000 to 59,200. The failure to break above these resistance levels suggests that bears are still in control in the near term. Sector-wise, it was a tale of two markets today. The Nifty Realty Index was a standout performer, surging 1.62%, with stocks like Brigade Enterprises and Godrej Properties leading the charge on improving demand in the property segment. PSU banks also shone brightly, gaining 1.44%, with Bank of Maharashtra and Federal Bank among the top performers, as the sector continues to benefit from improving fundamentals and government support. On the flip side, the IT and media sectors bore the brunt of selling, with Nifty IT declining 0.57% and Nifty Media falling 0.8% as investors remained cautious ahead of key global developments. On the macro front, the Reserve Bank of India's November bulletin painted an encouraging picture of the economy, noting that growth momentum strengthened in October, driven by festive demand, rural consumption, and the positive impact of GST rate cuts. Headline inflation dropped sharply to 0.3% in October, the lowest on record, providing some comfort on the inflation front. No major SEBI announcements impacted the market today, though the monthly derivatives expiry contributed to the heightened volatility witnessed during the last hour of trading. Turning to commodities, gold prices rallied sharply as Federal Reserve officials signaled continued support for a December rate cut. MCX Gold December futures jumped over 1% to trade around 1,25,300 rupees per 10 grams, while MCX Silver futures surged to around 1,57,000 rupees per kilogram, both benefiting from the weaker dollar narrative. On the crude oil front, prices remained under pressure with Brent crude trading near $63 per barrel and WTI crude around $58 to $59, weighed down by concerns over global demand despite some support from reduced Russian exports following Ukrainian strikes on refineries. On the geopolitical front, markets are keeping a close watch on developments in the Middle East as the Israel-Hezbollah ceasefire approaches its one-year anniversary amid continuing tensions. The US-China trade dialogue has shown some signs of progress with both nations working toward reducing tariffs, which has provided some relief to global risk sentiment. Closer to home, the focus remains on FII flow patterns and any signals from the upcoming RBI monetary policy meeting scheduled for next week. Looking ahead to tomorrow's session, the technical setup suggests the Nifty 50 is likely to remain in a consolidation phase within the 25,800 to 26,100 range. A decisive break below 25,800 could trigger further selling toward 25,700 to 25,600 levels. Conversely, a sustained move above 26,150 would be needed to reignite bullish momentum and push the index toward its all-time high of 26,277. For Bank Nifty, the support zone of 58,000 to 58,300 remains critical, while a breakout above 59,200 could open doors toward 59,500 to 59,800. The key catalysts to watch include FII activity patterns, global cues from overnight US markets, and any developments on the trade front. For traders navigating these volatile waters, my actionable takeaway today is this. Given the expiry-driven volatility and the index's failure to hold above 26,000, consider adopting a buy-on-dip strategy near the 25,850 to 25,900 zone, with strict stop losses below 25,700. The realty and PSU bank sectors continue to show relative strength and could offer opportunities on pullbacks. Avoid aggressive positions in IT stocks until there's clarity on the Fed's December decision. That's all for today's market wrap-up. If you have questions about today's moves or want specific stock analysis for tomorrow's session, send them in, and we'll address them in our morning show. Stay disciplined, manage your risk, and remember that markets reward patience. Stay tuned for tomorrow morning's pre-market wrap, and until then, happy trading.